We spend in real time on what I call the flip, ladies and gentlemen. That's when the old support turns into new resistance, or old resistance turns into new support. We're gonna go over that. That's a money setup right there. And then we're gonna talk about some time frames. We're gonna look at some actual ETFs and stocks or whatnot. I want to mark out key levels on a few stocks to pay attention to this week. I'm gonna see if y'all can point out the levels after we go through a few of these frames. But again, we're gonna spend some real time on it, and yeah, we're gonna talk about time frames too, which levels actually matter. I just want to give y'all an idea of what we finna get into. So, what is support and resistance? We're going to talk about the floor and the ceiling for those that don't know. When you're looking at a chart, first of all, a candlestick chart it ain't shit but a bar graph. So if you remember them teaching you about bar graphs in school, you shouldn't be confused about a candlestick chart. Don't let the fact that it's the stock market confuse you, or the futures market, or the Forex market, whatever the fuck you trading. It doesn't matter. You're looking at a bar graph. Okay? Remember that. The bottom half of the bar graph is going to show you the time or the dates. The right side of the bar graph is going to show you the price. All right? But as far as support and resistance, I want y'all to look at what's on the screen right now. Y'all see two horizontal orange lines. Everybody see the two flat lines marked support and resistance drawn across the candlestick chart, right? Hold on. I already know what you finna say, scalper. I'm gonna have to put you on mute just in case. Maybe you not, I don't know, but I'm finna mute you just in case. But good morning though. Good morning. I don't know. I gotta watch you because I know you will come in here trying to tell people what to buy or sell. And I don't know who trading Forex right now, but I'm sure they not watching my fucking live, waiting on us to tell them. Anyways, look at what's on the screen right now, right? So the bottom line says support. The top line says resistance, and in between those two lines, you got the price doing whatever the price does, right? It bounces around in between those ranges. You got the candles going up, you got candles going down, and usually, ladies and gentlemen, it'll be red and green. Just, never mind this. And you can really make the candlesticks whatever color you want them to be. But one color shows you it's going up, the other color showing you it's going down. All right, now, I always tell people the price is like a bouncy ball bouncing off the floor, hitting the ceiling, hitting the floor, hitting the ceiling. All right, that's the picture. Let's make it make sense. Support is a price level where the buyers want to step in. It is a level where they have stepped in the past. It is literally like a floor because the price keeps getting to that level and it doesn't just fall through it. It comes to this level or this zone, and then every time it gets there, people step in and they push the price higher. That's support. We call it the floor. 12th man edits. This is just me simply teaching you support and resistance. You can use this in a lot of different strategies, damn near any strategy. So you can use this in your strategy. All right. So listen, support is a price level where the buyers step in at. That's where they stepped in at. That is the floor under the market. When the price drops down to this area, something happens. The buyers see value. They start placing orders. Why do they place orders at support? Because at the last time it was at this price, it shot up from that level. It is simple. Let's not complicate this shit. All right. Enough buyers show up at that price. The selling runs out of gas. The price stops falling and then it bounces up. That's support. This is the floor where the buying demand is strong enough to stop it from sliding down further. All right. Now, resistance is quite the opposite. Resistance is the opposite. Paco said a NAS prediction for the week. Sell this week or a buy. We're not doing that tonight, Paco. We're not doing that tonight. You go in the Discord, I got all answers for you. All right. The link is in the bio. I got you. But we're not doing that on TikTok. We can't do that. I can't do what I want to do here. All right. So again, support is the price where the buyers want to step in. Resistance is the level where the sellers step in at. That's the ceiling above where the price is at. Okay, this is the price level where the sellers want to step in. The price climbs to this area, and then the sellers start dumping shares. People start taking profit, right? A bunch of people start betting that the market is about to go down from that level. And then the buying starts to dry up, aka lose momentum, aka losing volume, aka losing volatility. You with me? So the price pushes back down. That's the resistance. It's the ceiling where the supply is heavy enough to stop the rally. All right. Somebody says, what time frame are you looking at? Thank you. I'm gonna show you. So this works on any time frame, but I will explain the time frame ones in a second. Just stay with me. I promise you, I got you. But it's simple though. I want you to understand the basic, which is the floor and the ceiling. All right. Now, I don't want you to just memorize those definitions. I want y'all to really understand and understand why this is happening. Because if you don't understand why, then you really ain't gonna, you ain't gonna get it. But if you do get it, you ain't gonna never forget it, right? So the market is made up of people, ladies and gentlemen. When you trading, it is people. It is people buying. It is people selling. Behind every green candle on your screen, somebody pushed a button. Behind every red candle, somebody pushed a button. Or maybe it's a machine that somebody programmed. Either way, you got humans dealing with this shit. And humans got memory, right? We remember where we got hurt. You can't slap the shit out of me Tuesday and then do it again next Tuesday and not expect me not to think you shouldn't do it again every Tuesday. I see you on it, right? We got memory. We got muscle memory. We remember where we got hurt. We remember where we got paid at too. Okay? You done walk down this street. Every time you walk down this street or drive down this street, you run into a bag of money somehow. You gonna remember that street. All right. Now, the market remembers too. The market is just made up of all of us. That's it. The market is just all of us added up. Hellbound said, can you find the support and resistance just by looking at the highs and the lows of the day? Yes, you can, Hellbound. Yes. Yes. All right, so I want y'all to check this out. When the stock falls down to $30 and then it bounces back up to $40, what happened? It fell down to $30, but then it bounced up to $40. What happened? $30 becomes a memory. We have to pay attention to $30 because 30 became the price where the people made money. So the next time that the stock dropped back down to 30, you should be paying attention. Those same people, plus all the new people who watched the first bounce, they all step in and they buy again because they remember. Who in the chat gonna make money from this information? Who in the chat already made money from this information? Who already make money from support and resistance? Because if I want to know, y'all, let me know. Let me know. I should be seeing me. 12 man edit says soon. I know that's right. I don't see enough, I don't see enough answers in the chat. For me to continue, I need to know y'all before I go forward. If you made money from using support and resistance or key levels in trading, please let the people who haven't know so that they can see how important this is to trading. And if you are looking forward to learning how to do this, let me know in the chat. It also helps me with engagement, ladies and gentlemen. That's right. And tapping the screen helps me too. While I'm yapping, I need y'all tapping because tapping is clapping. You heard? Tap the screen. Also, share the live out too. Y'all, come on. Show the support. I'm going to show y'all the support. Don't show no resistance. Show the support, y'all. Don't show no resistance. Y'all see what I did there? But look, hear me out. So 30, if the price, I'm going to slow down. If the price fell down to $30, then it bounced up to 40, then it came back down to 30, and it don't go lower than 30, it's some people who watching this shit. They seen it happen the last time, and they gonna step in and they gonna buy again because they remember. I got you, Marcus. Don't trip. You ain't missed too much. They remember that it worked last time. This is collective memory, y'all, and that is what creates the support. Now, the same shit happens on the resistance side. Let's say the price shoot up to $50, then it gets smacked back down to 40. Now 50 is a memory. 50 is where the rally died. It was rallying upwards and then it died at 50. It fell down to 40. The 50 is where the buyers got trapped holding the bag. You got a lot of people who bought in when it got to 50 and they just holding it. So the next time the price climbed back up to 50, they gonna press fucking sell. Every person who got stuck up there is sitting on their hands waiting to dump at break even. Every short seller though, they loading up. at the same time. So all this selling pressure starts to show up at $50 and then boom, resistance. You understand? So that's how this shit works. It's not magic. This is not astrology. This is literally human emotions, fear and greed. That's all you're dealing with when you're looking at candlesticks on the chart. Once you start to see it this way, you can't unsee it. That's why this concept works on every market. It don't matter whether it's stocks, options, crypto, forex, gold. Fuck what you trading. It could be soybeans for all I care. It don't matter. It will work. It will work. This shit is super simple. All right. So I'm going to get real with y'all for a second, though. There's 3 mistakes that I see new traders make as soon as they learn this shit. And I want y'all to avoid all 3. Hellbound says, so you adjust your support and resistance as it drops or raises beyond what you originally had it set at. I'm gonna get you. I'm gonna get there. I promise you. I may not be moving fast enough for some of y'all, so just please bear with me, okay? I don't want to skip shit because there's people who need to hear it all. All right, they need to hear it all. The first mistake that people do, expect Hellbound, don't make this mistake. Don't draw too many fucking lines. Don't mark too many lines. Like, there is a such thing as too many lines. A new trader learns support and resistance, and the next time you look at their chart, that shit look like a spider web. 20, they'll have 20 horizontal lines all on the screen, and none of them mean shit because they everywhere. You understand what I'm saying? Less is more. Okay? I don't know who need to hear that. Less is more. Also, quick side note. All right, this is a quick brief intermission. All right, I don't know who need to hear this, but take fucking profit. Take profit. Okay, take profit, Mrs. Diamond Hands or Mr. Diamond Hands. Take profit. All right. I ain't telling you what the fuck to do. I'm just telling you to learn how to take profit. All right. Now, all right. Let me continue. So, where was I at? Yeah, spider webs. Don't turn your shit into a spider web, right? Less is more. So the strongest level is the obvious level. I'm talking about the level that your kid could point out. I mean, teaching my son how to do this shit, he point out levels clear as day. All right. So if you got to squint, it ain't a real level. You need to train your eye to be able to find the levels that's screaming at you, not whispering. The second mistake is treating these levels like exact prices. So support is not at exactly $30.00. It's an area. So it might be $29.75. It might be $30. It might be, it could be anywhere from $29.75 to $30.25. That whole little area. But we're going to spend a whole segment on this because that's important. I know a lot of people think that support and resistance is an exact level, but I need you to get this right now. The markets don't reverse on the penny. They reverse in the neighborhood. You see what I'm saying? And the third mistake people make, this one the killer. Y'all ready? They think support and resistance always hold. Huh? They don't. The price will break through support. The price will break through resistance. That's how the market works. The whole game is not about betting the level gonna hold forever. It's literally reading what the price does at these levels and letting the market tell you what's coming next, right? We're gonna come back to that. Somebody, Sonny said, how do you find support and resistance? Do you use Fibonacci? No. You don't need Fibonacci, but you can use Fibonacci retracement tool as a tool to help you find, key levels. Yes, you can use the different types of Fibonacci tools to help you, but no, Sonny, you getting ahead of yourself. You can look at the price and just spot obvious levels of support and resistance. I'm gonna show you something real quick. Let me show you something. Let's show you support and resistance in a trending market. Hold on. I got you. Let me see. I think I don't got it added up. I'm gonna pull up the image. I'm still here, TikTok. Calm down. Key levels. Nope, not that one. Yeah, where is it at? I'll tell you what I do. I'll tell you what I do. Hold on. Well, what about the time frame for the day trading? I'm about to tell you that too, Sonny. You must just came in. Hit the follow button, Sonny. I got you. You just stepped in. Hold on. All right, here we go. I got to dig through this folder. I had all these slides pulled up, but I want to show you the one for support and resistance in a trending market. All right, because people think it got to be horizontal. And it don't got to be horizontal. Sometimes it's in a trend. Where are we at? Where are we at? All right, it's okay. I'm finna use what I got. I'm gonna use what I got. Hold on. Downloads, photos. Is it this one? It can't be that. Nah, that's for how support becomes resistance. I'm gonna show y'all how support becomes resistance. I'm looking for, I guess that is it. Yeah, all right, cool. I'll just show y'all this. Let's cancel that. All right, cool. So look at what's on the screen. This definitely not it. There's an orange line on the one I'm looking for. All right, cool. All right, cool. This one gonna work. All right, so look at what's on the screen. My bad, y'all. Everybody got the hell on too. So look at the orange line. That's just the price action, right? Striped all the way down. This is not candles, no nothing. This is just the path that the price took. Okay. Everybody that's still here, y'all my day ones. So I'm shout out to y'all. That's why I'm gonna do y'all this work for free. Right? So listen, this is like a line chart. This is not candlesticks, but I want you to pay attention to the action of the price. All right, now you got these horizontal lines marking support and resistance levels along the way. I want y'all to watch what happened. Now on the left side, right, we see a green line that's labeled resistance. You see that on the left side? Everybody confirm that y'all see what I'm talking about. Can somebody confirm that they see what I'm talking about? Everybody be like, I already know support and resistance. Okay. All right, I got you. I got you. This ain't for you then. You know. But do y'all see what I'm saying? Right here on the left side, resistance, green line. Y'all with me? Okay, Jay said, I see. Appreciate you, Jay. Thank you. Thank you. I got some other people here acting like their fingers got rigor mortis or some arthritis, like they can't type. Yes, coach, we see this shit. Can you please continue? All right, y'all. I got y'all. Look. All right, so that part right there was labeled resistance. The price keeps bumping into that from underneath. It'll go up to resistance, come down to support, come up to resistance, come down to support, come up to resistance, come down to support. You see it. And then eventually, boom, the price breaks above that resistance level, right? And then this is the part I want you to see. Peep this. That same exact line that used to be resistance, as soon as the price breaks above it, it flips, it becomes support. The price comes back down to that level. Now that it touches it, it don't fall through it. It bounces off of it and it keeps going higher. Okay? That right there is the entire essence of trend trading. I'm sorry it took me 2 minutes to pull up the slide, but y'all stayed. Congratulations. You got that lesson. That's what every serious trader is watching for all day long. We are looking for the break. We're looking for the flip, the retest, the continuation. All right. We're going to go deeper on that later, but I need you to see it once first. Now, an uptrend by definition. Somebody in the chat tell me, what is an uptrend? What is an uptrend by definition? Small answer only. Yes, Sonny. Hellbound is when the price is making higher highs. You see how it's going high, and then it'll go low, and then it made a higher high, and then it made a higher low. That's called an uptrend. Yes, Jay. Whenever the price is making higher highs and higher lows, that is an uptrend. The price makes a peak, it pulls back, it makes a higher peak, higher than it peaked last time. Then it pulls back down again, but it don't go as low as it did last time. Then it makes another higher peak over and over. Excuse me. Each peak is resistance until it breaks. Each pullback, every time it pull back, that bottom is support until it breaks. All right. Now in an uptrend, support is your friend. Every pullback down to support is an opportunity for you to get back in that trade before it go back up. Every breakout above old resistance, once it gets retested, all right, turns into a new support level that you can lean on. The chart literally is going to tell you where the buyer's at. It's going to tell you where the sellers gave up at. As long as them higher lows keep coming, the trend is intact, and you can keep playing the shit. You see what I'm saying? Sonny asked me, what you asked me, Sonny? I missed the question. I don't see your question. It got buried. Now, the downtrend. The downtrend is the mirror. It's the flip side of that. A downtrend is lower highs and lower lows. The price comes down, right? And then it bounces off that level. But when it bounces up, it don't go up as high as it did before. The bounce dies at a lower price than the last bounce. And then it drops to a new low, a lower low. Then it bounces up again, but it bounces up even lower than it did last time. And it keeps going. So in a downtrend, resistance is your friend. As if you shorten, okay? Shorten mean you press and sell if you trading futures, or you buying puts, maybe, okay? But yeah, shorten is selling though. You know, you might be doing covered calls at that point, selling calls. But either way it go, every new lower low creates a new resistance that's on the overhead side. The chart gonna tell you who in control every time. As long as the lower highs keep coming, the downtrend the downtrend is in control of the wheel. So literally, context is everything, y'all. Like, what I want y'all to take away from that, walk up with what you can lead us live right now. Support and resistance are not just lines. Okay, they are checkpoints in a story. The story is the trend. So the checkpoints is just telling you where the story is still going, whether that shit gonna stop or whether it's gonna change. If you trade support and resistance without paying attention to the bigger trend, guess what's gonna happen? You're gonna lose money. Ain't no way around it. Ain't no way around it. Ain't no way around it. Nah, for real. Because if you buying support in a strong downtrend, then you are catching a falling knife. And that support is gonna break you down. The support gonna break. And you ain't gotta worry about catching no dog. You gotta worry about a dog catching your ass. All right. So, same thing with resistance. If you shorten resistance and it's in an uptrend, resistance gonna break your ass down too. So professionals don't just look at the level, they look at the trend. I want to know, is it in an uptrend or in a downtrend? Then they look at the levels inside the trend. The level is just the entry. The trend is the permission slip, ladies and gentlemen. All right. Now I think I can go to the other one. Hold on. There we go. Here we go. So I want y'all to look at what's on this screen right quick, right? Because this slide, I think this is one of the most important ones I wanted to show y'all. It's only 4 slides. It ain't a lot of them, y'all. Don't start that sleepy shit. I know it's 1:15 a.m., so I ain't gonna hold y'all for too long. All right. But this is for my people that's gonna watch the video this morning. All right. And 9 a.m. the video gonna drop for a lot of people at 9 a.m. But I bring it to y'all on TikTok because I know y'all pay attention. If don't nobody pay attention, my people on TikTok be tapping in. This where I got the most effect. I want to say affection, but I also see the most effect right here with y'all. But anyways, look at the chart. It says support and resistance levels are not an exact number that the market is going to reach and magically reject. I'm going to read it because some of y'all probably can't see. Turn the phone sideways and then you'll be able to zoom in if you want to get a better look. Turn it portrait mode. I mean, not portrait mode, but landscape mode. Turn it sideways. Now, support and resistance levels are not an exact number that the market will reach and magically reject. They are zones in which the candles can test multiple times before turning around. The more often the price rejects a support and resistance zone, the more likely it is to break. It is very common to see a broken resistance area to act as support and vice versa with the broken support area. The third touch is usually the strongest rejection and tends to be favorable in the direction of the trend. All right, now let's break that down. Because again, I want y'all to understand that the zones where candles can test multiple times before turning around, that's what it is. It's a zone. It is not a precise number. Not pennies, it is a zone. Don't nobody fuck with nobody. These Forex dudes, they are still scamming. After COVID, damn, get the fuck out my live stream, dude. I see you lucky I ain't got none of my, excuse my French too, y'all. I like to cuss people clean out when they come here with that bullshit. Because I care about y'all. I don't want them scamming y'all, getting y'all to buy none of this stupid shit they be trying to sell y'all. What up, Telly? Happy birthday. Happy birthday, Telly. But yeah, y'all, again, support and resistance. Now, let's look at the chart underneath. Y'all see the candlesticks underneath the description? All right, y'all see that red resistance area at the top, that red line at the top. That is the resistance area. That is a band, not a line, right? Now, inside that band, you see multiple candles poking up into it. They getting rejected, they coming back down, but each rejection candle got a red circle on it, okay? The first, you see 3 red circles. We got 4 green circles on this chart. So let's just look at the first 3 red circles real quick. I want y'all to pay attention to that resistance level, okay? Now, you see that red resistance area at the top. That is the band. Each rejection got a circle on it. 1, 2, 3 rejections. I don't know if y'all can see my mouse. 1, 2, 3. We got 3 rejections, right? Now, it touched the area multiple times before something finally happened. All right? But at them 3 times, man, if you ain't paying attention to that shit after the 3rd time, you don't need to be trading. Same thing on the bottom, okay? We got green support areas, multiple candles dipping into it, multiple bounces, right? The green circles are marking every single one of those bounces. Do y'all see it? Yes or no? Just tell me in the chat if you can see it or not before I continue. Okay, I got a couple yeses. I'm looking for a no, to be honest, because if one person say no, it's probably 30 other people that's scared to say no. So y'all see it. Y'all see this, the green circles, the support area, the red circles, the resistance. We had 3 levels of resistance, 3 touches before something finally happened. The market is not choosing. Okay, they said no. Look at the bottom of the chart. Do you see the green circles? Those are marking every time the price came down to this support level, aka the floor that the bouncy ball is bouncing off of before it goes back to the ceiling. When you slap a ball real hard on the ground, it bounces off the ground, hit the ceiling, bounces off the ceiling, hit the ground. Well, I got the ground and the ceiling marked every time it hit with red circles. If you look on this chart, you'll be able to see it. Do you see it now, Kay and Sunny? The red circles and the green circles, those are marking where the price hit the support and resistance zone. So look, I'm explaining to you. The market is not going to go to a single digit number. It's going to go to a zone. Don't be caught up on that, on the zone, on the line. So this is why this matters. The market is millions of orders. You got millions of orders coming in from millions of different people. Some of these orders is at $30. Some of them getting in at $29.99. Some of them getting in at $30 and a dime. Some at 30 and a quarter. So there isn't a universal agreement that the level is exactly 30, but there is a cluster of opinions. That cluster forms a zone. All right. Now, when you draw your support as one skinny line, you lying to yourself. You pretending that the market is precise and it's not. You setting yourself up to get faked out. I want you to watch what happens. The price comes down to your line at $30 and then it'll pierce through it by just 20 cents. 20 cents. This also will be fucking up a lot of y'all stop losses too. Because y'all don't understand this simple concept that support and resistance is not a precise number. It is a zone. Okay? Don't panic because the shit hit 29.80. You panicked. You stopped out at the low and then the price reverses and it ripped. So you got shook out. Oh man, what? TikTok, stop the cap. Here they go with this bullshit. Now they y'all come on. I don't know what to tell y'all, but if y'all don't tap the screen, share the live out, talk to me, TikTok gonna think something. I don't know what they on. That's right, I'm holding y'all accountable. We gotta show TikTok that I belong here. I don't know what the fuck everybody else doing on here, but they not coming with what they should be coming with for y'all. You feel me? I don't like just being a funny guy. This shit is everything fun and games till them bills do. Till them kids grow up and you know. Let's make sure we got something to pass down to the nieces and nephews. All right, and until everything fun and games till it's time to retire. You feel me? A lot of y'all ready to retire right the fuck now. You don't got time to be playing. This the type of content you need right here. You ain't trying to be working fucking forever or at all. Some of y'all ready to sit down right now. So please pay attention because I'm here for you. All right, now, again, when you draw your support as a skinny line, you're lying to yourself. I don't want you to do that. I want you to understand that you need to realize that it is a zone. Draw your support as a band. Draw your resistance as a band. Give the market room to breathe. Give your trade room to work. That right there is one of the biggest unlocks that I can give you, okay? As a new trader, that's gonna help you. Now I want y'all to remember the 3-touch rule. The more often that the price rejects a support or resistance zone, the more likely it is to break. And the 3rd touch is usually the strongest rejection and tends to be favorable in the direction of the trend. Let me decode that for y'all. Every time the price comes back to test the support or resistance zone, every time the price come back to touch a zone it just left from, look at the screen. It went up, made that first hit that resistance zone that first time, which created the first red circle, came down to that support zone, made the first green circle, came back up. And now I'm paying attention to this level anyways because it came to this level before and stopped. But the fact that it came to this level and stopped again, oh my, you know, my hairs are standing up at this point. Because now I'm looking at, you know, the last time it came here, it went down to support. And guess what it did? It went down to support. So now we at this level of support, and I'm like, well, hey, last time it came here, it stopped around here in this zone. And it stopped there again in the same zone. And I know last time it stopped here in the zone, anybody that got in here and got out at resistance, they made good money. So this will be a good spot to get in at right here. All right. And guess what happened? From that second green circle at the bottom to the third to the third red circle at the top, they made money. Actually, from the third, let's look at this the right way. From the second green circle on the bottom, because there's 3 green circles on the bottom. Okay. So if you look at the last 2 green circles on the bottom, there's a gap, right, in between the last 2 red circles at the top at resistance, because the price didn't make it all the way back up there right away. It made a lower high for a second, came back down, and then it shot up. Either way it go, the price failed to break above the previous level of resistance. It failed to break below the previous level of support. All right. Can y'all see my screen? Because TikTok's saying that y'all can't. It says your live is restricted in recommendations and search results for 10 minutes due to low quality content such as black, blank, or blurry screens. Learn more in TikTok live section of the community guidelines. They calling my slides ass. They saying, boy, your slides is ass. I'm gonna tell TikTok TikTok should allow content like mine. That's what I'm gonna tell them. And you TikTok, by the way, I got 40 plus people in the chat saying that they can see it clear, for the record. So I don't know what's going on with your algorithm, but whatever. Anyways, y'all, it's called the 3-touch rule. Okay. Now, every time the price comes back to touch a support level or a resistance zone, some of the orders that was sitting there, they end up getting filled. You got a bunch of people, a pool of buyers at support. The pool of buyers at support drains a little bit every time. The pool of sellers at resistance drain a little bit every time. After 3 or 4 or 5 tests, sometimes that level is exhausted. The price that came up to this level, it's exhausted, okay? Ain't nothing left to defend it. And on the next touch, the price gonna punch through that level. That's why old, well-tested levels is both the most reliable and the most dangerous at the same time. All right, because they done held a lot. But every time it hold is gonna make the next break more likely. Like this shit done held so many times, the next time it get here is more than likely gonna break. It ain't guaranteed, but get ready. You know what I'm saying? So you don't just look at the level and assume that it's gonna hold it forever. No. You count how many times it touched that level, and you ask yourself, how many times has this been tested? If it's been tested 6 times already, you might want to be careful, because that 7th touch might be the one that break. All right. So that third thing, the third touch, that's the one you can put your heart into, right? Not your emotions. That's real wisdom. I'm going to say that. Real wisdom in that one. The third touch is often the strongest rejection, because by then everybody and their mama see the level. Everybody that's watching the chart in the world then drew that line. Same line. Everybody waiting to trade off of the same level. So the reaction at the third touch is usually violent and is usually clean. You ain't gonna see it hit it that many times. That's why a lot of professionals wait for the third confirmation, y'all, before they put a lot of dip on the chip. Right? Y'all see this arrow on the right side? It's pointing to a candle that broke above the resistance zone. So that candlestick right there is the one that broke above the level. It broke above the zone. Came back down, touched the same zone from above, right? And if you look at it, it says retest of broken resistance area now acting as support. That right there is the holy grail. That's the holy grail concept that we'll spend probably the next 15 minutes on if TikTok let me. All right, let me see. We'll spend the next 15 minutes on this topic right here. So let's go. Let's go ahead and get into it before they kick me off. We're gonna talk about how support becomes resistance. This is where the money at. If you new here, hit the follow button. This is where the money at. All right, now we're gonna get to the meat. Let's see. So look, we got two charts stacked on top of each other, right? The top chart is a market in a downtrend. The bottom chart is the market in an uptrend. Both of them is showing you the same thing. Basically, it's both of them showing you, okay, my appeal got approved. Thank you. All right, yeah, both of them showing you the same thing. And they are both showing you a key level being broken. They both showing you key level breaks. And once it breaks, it flips. What was support turns into resistance, or what was resistance turns into support. This is not a coincidence, ladies and gentlemen. This is not an accident. This is one of the most predictable and tradable patterns in the entire market. Once y'all get the psychology behind this, you're going to start spotting it on every chart that you look at. And I'm telling you, this one concept right here is a career maker. Are we clear? Look at the top chart. On the left side, you see the price trading in a range. It's bouncing between the upper resistance level and the lower support level. The red zone at the top and the bottom, that is showing you clearly that that's the zone. That's consolidation. It's going sideways for a second, and then something happens. The price punches down through that support level, right? That candle that breaks below the support, that's the breakout candle. In this case, it's a bearish breakout. The floor caved in. Now watch what happens next, because this is where the money is at, y'all. I'm telling you, the price don't just keep falling forever in a straight line once it breaks support. If you ever set your levels, your support and your levels up, your support and resistance levels up, and the price breaks one of them, it's not just gonna keep going. It's gonna come back to that level. After the breakdown, we at the top, we looking at resistance. After the breakdown, the price rallies back up. So the price came all the way back up. Where did it go? It went right back up to the level that used to be support. And then it get rejected. That rejection candle marked with the yellow circle, that is the retest candlestick. The price tested the old support from below, found out it had flipped to resistance and got knocked right back down. Right? And then the entry, where I would get in, that's where I would get in that trade at. The dotted green line on the right side, ladies and gentlemen, that's where I would get in that trade at. That's where you could enter a short trade with tight risk. That means I'm not risking a lot. That means, hey, I'm only going to lose a little. I'm either going to make a lot, make a little, break even, or lose a little. Losing a lot is not an option. After the retest confirms that the old support has flipped to resistance, you got a defined level overhead. If the price breaks back above that old support zone, then you wrong. You get the fuck out the trade, small loss. But if the price stay below and the trade keeps working, clean, right? Boom. This works on any time frame, Josh. Again, I'm going to get, I swear y'all, I got y'all. I know y'all like, bro, I ain't got time to wait on you to get to the time frame part, but that's next, Josh. Real talk. I'm about to go over that real soon. I just want that. Let me finish this one slide, and I'm gonna go right into the time frames, because this works on all time frames. And yes, volume does matter, Josh. All right, it does matter, because the price can break support with low volume, and I wouldn't take it serious. Also, the smaller time frame support and resistance, they change fast. So I don't pay them as much as attention as I do as support and resistance on the higher time frame. They are stronger. Support and resistance on a higher time frame is stronger. All right, now the bottom chart, let's talk about we already talked about the top chart, which is support flipping into resistance. Now we're going to talk about how resistance can flip into support. Same exact concept, opposite direction. The price is in a range, is bouncing between support at the bottom and resistance in the middle, right? And then a green candle breaks above the resistance level. That's the breakout candlestick. This time it's bullish. The ceiling got punched through this time. After the breakout, the price goes up a little bit more, but then when it pulls back, where does it pull back to? Right to that old resistance level. K says, yes, I'm finally getting it. K, that give me goosebumps. That's what I'm here for. That's what I'm here for right there. You made my night, K. That's what I'm here for. Anybody else getting it, finally getting it? Or is it just K? I know a lot of y'all already knew it, so congratulations to the people that's finally getting it. But for the people that already knew it and you just sitting here listening to my voice, hey, I fuck with you too. You know what I'm saying? You just sitting here listening just to listen. You like, hey, I already know this shit, but I fuck with bruh, so I'm just gonna kick it with him, you know? Thank you. Gracias. I speak Spanish like a gringo. Because what if it breaks through but doesn't pull back to support? For the bottom chart, okay. If it breaks through and doesn't pull back to support, then that just means it's a strong uptrend. Eventually, it's gonna pull. You will see a pullback. What's up, Monique? You made it very clear for me too. Says TGGG. Good. Yeah, Josh. That just means it's a strong uptrend, but you could still wait for a pullback to happen. Sometimes, Josh, the pullback don't happen right away. You know, so the retest. Sometimes the retest don't happen right away. Sometimes it'll come back and retest that level later on in the future. But the key point is, Josh, you're going to be ready because you're marking these levels. You got it marked with a horizontal line that go clear across the chart into next year if you wanted to. I got levels on certain stocks that still got every line I drew on it this same time last year. Right? But hear me out. I want y'all to get. Well, first of all, I ain't finished the bullish one. All right, so look, it got rejected when it pulled back to the support level. It did not break back through there. This time the rejection is upward. The buyer stepped in. The retest candle in the yellow circle on the bottom confirms that the old resistance level has now become a new support level, and I will get in right there at that dotted line because I got that confirmation candle for me. That's where I would get in. So I want y'all to get this real quick. Understand why this works. This concept is going in your toolkit forever if you can understand why this works, right? So let's get under the hood real quick. Whenever a stock breaks below a support level that's been held multiple times, what happens emotionally to the people who bought at that support level? I'm going to say it again. When a stock breaks below a support level, and it's usually held that support level, what happens emotionally to the people who bought at that support level? So if you bought at support and the price go lower than that, you sick as hell. Yeah, Sonny. Fear, hurt, pain, etc. Now, what do they do in that moment? First of all, they bought because they thought that the floor would hold. They bought at support because they thought that the price was going to stay at that level and go up like it did the last 2-3 times, right? They thought the floor would hold. The floor didn't hold. They losing money. They in pain. So what do? No, they don't sell. They wait, y'all. They wait. They wait and they hope. They hope that the stock gonna come back to where they bought it so that they could break even and get out. The smart thing would be for them to sell. But I'm talking about there's thousands of people who get trapped as a buyer. That's called a trapped buyer. There's thousands of them. Now, when the stock started to pull back up towards that old support level, the trapped buyers that bought at support, who got trapped, they see their money coming back to break even. They finna press sell, bruh. And when they press sell, when they press sell, they dump their bags. They get out at break even because they don't want to feel that pain again. That selling pressure, okay, all them trap buyers unloading at the same time. That's exactly what creates the resistance at the old support level. The flip is not magic. It's literally the visible footprint of how people feel. Same thing in the opposite direction. When a stock breaks above a resistance level that's been held multiple times, the short sellers who shorted the resistance is now in pain. Okay? When the stock break above a resistance level, like it did at the bottom, it broke above resistance. Now you got people who, when they got to that resistance level, hold on, TikTok telling me to complete a puzzle. We have detected inactivity during your current live. Complete the verification to continue your current live. Like, y'all need to fix this, TikTok. I should be able to do whatever I want to do on here. Anyways, like I was saying before I was rudely interrupted. When the price breaks above resistance, and you can see this example by looking at the bottom of this what do I want to call it? Slide. Look at the bottom of this slide. The price broke above resistance. All right. When the stock breaks above resistance, because it was holding it multiple times, there was people who, instead of buying a call, they bought a put. Or let's say it's futures. Instead of them pressing buy, they press sell at resistance, and the price shot up. So now they're trapped. They are in pain. They are also going to wait. They going to hope. They going to pray for a pullback. When the price come back down to retest the old resistance, the short sellers either cover their shorts at break even, which creates buying pressure, or a lot of people step in and start pressing buy or start buying calls because they see the level now holding as support and they'll pile in. Either way it go, you're going to get a bounce. Now, the retest entry is so powerful, y'all. It's really this is the practical part. Why do experienced traders love the retest entry more than the breakout entry? Can anybody tell me why? Anybody tell me why traders like that retest better than the breakout? Why would I want to get in on the retest instead of the breakout, coach? It's a higher chance I see you peaking. Yes, TGGG, definitely better confirmation, another level of confirmation. Yeah, history repeats itself. Lower entry on the retest. These are all great answers. But again, first of all, risk management is way cleaner. If you buy the breakout candle itself, your stop gotta be way below the level that you broke, maybe 10% away. That's a big stop, and that's a big loss if you wrong. But if you wait for the retest, your stop is just below the level that you retesting, maybe 1 or 2% away. So you get the same upside with way smaller downside. I'll explain that in a risk management live stream another day. But for now, I just want to stick to support and resistance. But I'm going to dive deeper into risk management this week. All right, this week, that's going to be one of the main topics I come on here and talk about. Y'all, you know, if you tired of it, whoop-de-doo. If you mad, scratch your ass and get glad, like my granddaddy used to tell me when I used to cry. My Papa Bubba used to tell me, you mad, scratch your ass and get glad. Now, second, the retest filters out the fake. The second reason why the retest entry, like getting in on the retest, is more powerful than the breakout, is because it is going to filter out a fake out. Sometimes the price it looked like a breakout, but it's really a fucking fake out. It's not for real. It's tricking you. It wants you to think it's about to go up, and you buy a call, and then it goes the opposite direction because you couldn't wait on that retest. If you had just waited on a retest, you would have known. Okay? If you waited for the retest to confirm the new support level, you wouldn't have even taken the trade. The retest is the confirmation. The retest is the market saying, yes, this is real. You can go now. You don't have to ask nobody when to get in the trade. You don't gotta watch nobody fucking live trade. If you learn this information, I don't give out fish, y'all. Here at Ironworth Trading, I'm not giving y'all no fish. I'm gonna teach y'all how to fish instead. So you want somebody else to give you fish and shit, go somewhere else. Soon as they ass not around and then where they can't live trade and show you what their screen, I don't know what the fuck they be doing with y'all. I really don't. I don't know. I don't think there's a lot of learning taking place there. Now, hear me on this. The retest is not a guarantee. I got you, Micah. On what time frame do you wait for the retest? I got you, Micah. Hear me? Give me a few more minutes. Cause you like the third to fourth. That's the one y'all really want. I got y'all. I'm gonna land the plane. All I need y'all to do is hit the follow button, tap the screen, share the live, support me. I'm gonna support y'all. Now hear me out on this. The retest is not a guarantee. Sometimes the level break and retest and then break again in the original direction. The market is messy. It's a toxic relationship. Okay, this is a love-hate relationship. Nothing works 100% of the time. All right, even the best setup in trading is only gonna win 60, maybe 70% of the time on a good day. But what makes this setup so powerful ain't that it's not that it always works. What makes it powerful is when it works, the reward versus how much you risking is huge. Okay? But when it doesn't work, you find out fast and you lose small. That's the good part about this shit. All right? You will do no such thing, Ibrahim. You will get the fuck out of my live stream. Ooh, I ain't mean to rhyme there. Ibrahim, you would do no such thing. You will get the fuck out of my live stream. I got him gone, y'all. I blocked Ibrahim, whatever his name was, Rumpelstiltskin. All right, anyways. So again, y'all, that's what makes that one so good. It's an asymmetric bet. Like small losses, big wins. The retest setup gives you that math, and the math is the only thing that beats emotion in this game, y'all. So here, this is what y'all been waiting for, right? This is what y'all been waiting for, the time frames. I got you. Here. Y'all think I wasn't thinking about y'all? I already knew y'all was going to be asking me about time frames 50-11 times. I done came to the club about 50-11 times. Can I find the time? The club owner said I need to calm down. All right. Calm down, Cedric. Calm down. All right, so look. Not all levels are created equal. Let's talk about this. Which levels actually matter? Because y'all been asking me about these time frames. Are y'all still here? Put a W in the chat if y'all still here. Anybody, especially the people that kept asking me about, not you, Mike. I ain't getting smart or sassy. I don't want y'all to be like, oh, why he getting sassy? But I'm for real though. Is y'all still here? They still here. Bet it up. Bet it up. Now, on this slide, we looking at 3 different time frames, right? We got 3 time frames on one screen. We got a monthly and the weekly at the top, and we got the daily and the 4-hour in the middle. We got the 1 hour and the 15-minute at the bottom. Each one with the little candlestick showing you what support and resistance look like at that time frame. Okay, now this is what I'm finna teach y'all. Y'all can write this shit down somewhere. I don't care. But remember this. The bigger the time frame, the stronger the level. Y'all don't got to type it in the chat. Just say it with me. The bigger the time frame, the stronger the level. Tap the screen if you understand that much. If y'all heard that loud and clear, tap the screen so your brain can lock it in. The bigger the time frame, the stronger the level. Always. No exceptions. A support level on the monthly chart is more powerful than a support level on a weekly chart. The weekly is more powerful than the daily. The daily is more powerful than the 4-hour, all the way down. Now, why does the bigger time frames win? Because you got more eyes on it, y'all. The reason is simple. The bigger the time frame, the more eyes is on it. The monthly chart is being watched by hedge funds, banks, institutions, family offices, mutual funds, meemaws and pawpaws. That's the big money. The 15-minute chart is being watched by day traders and robots. All right. So when you get a level that institutions are defending, that level got billions of dollars sitting on it. When you get a level that day traders are defending, that level might have a couple million on it, maybe. Big money creates very strong levels. Small money creates weak levels. That's just math. I'm like, the fish ain't fighting the whale, y'all. Come on. Renee says, what's the best chart app to use? That's preference. That's preferable. Like, whatever you prefer, Renee. Really, I can say one thing, but they not paying me to tell you, so I'm not finna tell you. None of them want to pay me. Says, none of them want to pay me to promote them. Webull, I'm talking to y'all. But yeah, I use Webull, Renee. A lot of people use TradingView. A lot of people use Thinkorswim. Robinhood Legend is starting to step they shit up. So you look at them all, Renee, and you look at which one you like, and that'll be which one you go with. Now, I want to tell y'all how to use each time frame. All right, we're going to learn how to use each time frame. Read what the slide is telling you. Okay, so monthly resistance zones is critical levels, which is strong enough to stop a trend from continuing. When a stock been grinding up for months and it hit a monthly resistance, that's where the move probably stops or pauses. You don't fight monthly levels. You respect them. Yeah, yes, I do, sophisticated Aura. It's cheap. It's not even expensive, right? Under $5. It's cheap. But yeah, where was I at? So yeah, you don't fight monthly levels. Now, the daily and the 4-hour levels, those aren't as strong as the monthly or the weekly. But let's keep in mind that they better for finding the tops and the bottoms within a range. So this is your swing traders' bread and butter, baby. Like Ving Rain said on Baby Boy, this is bread and butter, baby. If you holding for days or for weeks, that is the level that you building your entries around. All my swing traders. But this also works for day traders too. Like on a 1 hour and a 15-minute time frame, lower time frames got the weakest support and resistance levels. Those break a lot. Like they are suited to trading breakouts. If you listen, you scalping, whether you want to or not, you are going to be a scalper. As a day trader, you got to learn how to scalp. It moves fast. You could be in a trade for 15 seconds to 15 minutes. You make $200-$300 in 15 seconds and 15 minutes. You can lose $2,000-$3,000 in 15 minutes, 15 seconds. You can make $2,000-$3,000. You make 20. You can make a lot of money or lose a lot of money. That's my point. In a matter of seconds. So, on the smaller time frames, they're weaker, which just means that the price will break through them more often. They break easy, they move fast. Do not trust them for big positions. You use them for quick in and out trades. All right. Now, professionals, they start at the top. They look at the monthly chart. They look at the major levels, the big ones, the ones that then held for years. Then they zoom into the weekly. They look for levels that line up with the monthly. Then they zoom into the daily. They're going to then zoom into the 4-hour. Then maybe the 1 hour. Then the 30-minute. Then the 15. Then they looking at the 1 and the 5 as time frames to get in the trade or out the trade. You don't make decisions on the 1 minute time frame. That's for you to pull the trigger on the 1 minute. You be stuck on the 1 minute chart looking at the candlesticks and shit. I don't get that. But look, the strongest possible trade setup is when a level on a daily lines up with the level on the weekly, which also lines up with the level on the monthly. That is called a confluence zone. That's y'all word for tonight. Confluence, CONFLUENCE. Do your homework. It's going to make you some money. That's a big money word right there. Am I lying? Anybody made money off that word? Let me know in the chat. If you want to make money off that word, just pay attention. Do your homework. Go, do some due diligence. Learn how it works. Multiple edge trading advantage. Confluence is just basically everything working out in your favor. Okay? Extra confirmation. Do your research. That's my definition. That's not the real definition. But do your research on Confluence. 3 time frames screaming the same price. That is the trade institutions wait for. That is the trade that I want y'all to learn to wait for too. If you only trade in 1 time frame, then you guessing. If you trade in multiple time frames in alignment, you taking a calculated trade with real evidence behind it. This is what separates you from being a gambler or a real trader. This is the difference between gambling and trading. All right, a lot of y'all are going to take this information and execute. Slay, make a lot of money. Clock the T, ladies, clock the fucking T. Right? But the rest of y'all, a lot of y'all gonna start y'all career. Y'all gonna start y'all trading career on a 5-minute chart, right? Why? Because it's fast, it's exciting. They want to see action. But the 5-minute chart got the weakest levels in the game. It's just chop. It's just traps everywhere. If y'all brand new to Ironworth, you know what I'm saying? If you a brand new Ironworth trader and you got less than 6 months of screen time, do me a favor. Stay off the 5-minute chart. Stay off the 1-minute chart. Trade the daily, the 4-hour. Use the weekly for context. Your win rate is going to go up dramatically. Your stress is going to go down dramatically. And you're going to start to see the market for what it actually is. Not the way the noise is, it's going to calm the noise down. All right. So we covered the theory. We covered the psychology. We covered the zones. We covered the flip. We covered time frames. This the last thing I need to talk to y'all about is the mechanics. How do you actually place a trade using support and resistance in the real world with real money on the line? All right. So you want to find the level on the highest time frame that you care about. Before you even think about entering the trade, you want to start at the top. If you a swing trader, you hold. Who's counting down for June 4th for the end of the PDT status? Oh yeah, Renee. So Renee, is that an exact date? Do we got an exact date on that happening? By the way, y'all, the PDT is the pattern day trader rule that's going to lower it from 25,000 to 2,500. Meaning you ain't going to need as much to day trade in a margin account as you used to need. I don't even know what's going on with margin right now too, because you got a lot of people using margin accounts, like billion some dollars of margin out there right now. But yeah, like I was saying, y'all, patience pays, right? So we not forcing shit. Like once I want y'all to learn how to let the price come to you. Like when you marking these zones, you marking them as zones, bands, not just a skinny ass line. Look back through history. Where did this level hold at? Where has it been tested? Okay, use a rectangle instead of a fucking line sometimes. That's going to help you. But once you got your levels drawn, you wait. This is where a lot of people fail at. They can't wait. They want to be in the market all day, every day. Real money comes from patience. You're going to sit on your hands until the price comes to your level. If the price don't ever come to your level, there shouldn't be a trade. Move on. Find another setup. But when you chasing something that's running from you, again, patience pays. The traders that y'all see on TikTok popping bottles and shit, showing you they P&L, showing you how much money they made. Okay, y'all, this is how much money I made. Blah, 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 blah. They trading 5% of the time, y'all. They sitting on their hands the other 95% of the time. The hardest skill in this game is not picking good trades. It is basically being able to not pick the bad ones. All right. Now, when the price finally get to your zone, That's when the work actually begins. You don't just blindly buy at support and sell at resistance. You read, you watch, you let the market show you what it want to do. If you're looking at support, you want to see the price arrive, slow down, show you signs that the buyer's stepping in. All right, what does that look like? We want to see long lower wicks on candles, hammer candles, bullish engulfing patterns, etc. That's a whole nother class though. Either way it go, you want to see signs that the buyers is absorbing. Those are signs that the support will be holding. If you see that, then and only then can you consider entering long. Opposite for resistance. Long upper wicks, shooting star candles, bearish engulfing patterns. That's another class. Volume spiking towards on the rejection, and then let's see if you see price refusing to close above that zone. Those are signs that the sellers are stepping in and you want to consider a short. The candles are literally talking to you at the level. Your duty is to listen, y'all. This shit's not hard. Don't blow up your account. A lot of y'all don't put your stop loss in the right place. You put it too tight, then you get shook out of a normal move. You should have just been still in it. Or you make it too loose and then you're going to take a big ass loss when you're wrong. The right place for a stop loss at a support level is just below the bottom of that zone. Not the middle, not the top, just below the bottom. Because if the price closes below the entire zone, your thesis is wrong. The support broke. Get the fuck out the trade. Take the small loss. You live to trade another day. Same logic at resistance. All right, you want to put your stop loss just above the top of that zone. If the price closes above it, the resistance broke, you wrong, you get out. I'm going to give y'all one rule before I go that's going to separate the professionals from the amateurs. The professionals never enter a trade where the upside is smaller than the downside. And I'm talking about never. If you risking $1 to make 50 cents, that is a losing strategy long term. Even if you win 60% of the time. Understand that there's a difference also between risking and leveraging, okay? I will risk $1,000. I leveraged $1 million. Okay, let's say I put up $1 million on the trade. If it go the wrong way, I'm walking away with $999,000. I wasn't risking $1 million. I was leveraging $1 million. Okay? So, you don't want to risk $1 to make 50 cents. The math ain't mathing right there. So before you enter, you need to measure from your entry to your stop loss. That's your risk. From your entry to the next level above. Let me show y'all real quick. I'll just go ahead and show y'all. Hold on. Let's share my screen and pull up Webull. Y'all do me a solid one and put a W in the chat if y'all still can see my screen. Real quick, let me know if y'all can see it. All right, cool. The comments are in the way. Are they really? See your slide. Oh, hold on. Okay, hold on. Thank you. Boom. Is that better? That should be better. Yes. Perfect. All right, cool. So I wanted y'all to see this on a real chart real quick. So matter of fact, I'm gonna use SPY. We're not gonna use Broadcom. We're gonna use SPY. So this is a weekly time frame. So these levels are strong. Okay. This is these are I'm gonna mark the resistance. And of course, where we at now, 749, but cool. We just broke above a major level. Okay, this support too right there as well. We see this floor. Okay, and in the past, the price, that was resistance in the past. Resistance right here is now support, 695. But this is on a weekly time frame. I can come to a daily time frame and get an even closer look. Let me get the EMAs off here because I don't want to confuse y'all with no indicators. All right. I just want y'all to see price action real quick. So here, this is a good example. 633 was a level of resistance right here in the past. The price came all the way up to this level, came down, came back up, and finally broke above that level, just for it to come back to that level again. Okay, same zone. Same zone. And it bounced off that zone, and it broke above resistance right here, because this is resistance. All right, the price gave you 3 touches right there. And by the time it touched it here, we got a good breakout. This was the pullback. I think it was Josh. Josh said, what if it doesn't retest? Well, Josh, that's what happens when it doesn't retest. Each red candlestick is the pullback that you got. But if you was waiting on it to come back to this zone, you would have missed all of that. Just know that it don't always come back to touch an exact price level. All right, let me go down to a smaller time frame. Hold on, let me mark these levels too. I don't want too many fucking lines though. I don't want too many lines. So let me go down to a 4 hour. Now I got a better look at the price action. I know that these levels are strong. 633, 695, 728. This is a swing trader perspective still though. I'm still looking for a swing entry. Day traders are not really watching a daily chart or a weekly chart or a monthly chart because they don't plan on being in the trade for a week or a whole day. Some of them aren't going to be in the trade for 4 fucking hours. Can you show us how to use a stop loss or limit? But I'm about to show you real quick, Santos, about measuring your risk management. I'm gonna show you where you would put it at. Yeah, I got you. 1 second. 1 second. So now look, 30 minutes. I come down to a 30-minute time frame, and I'm already seeing that the price gap down. This is a big gap. What is a gap? That's when the price just skips. All those prices got skipped, and it just shot down. All right, so there's an imbalance in price. This candlestick's missing right there. The price likes to come back inside the gap and fill it. Okay, but as of right now, let me delete this. The price is making higher lows. It's making higher lows. Sure it is. Sure in the fuck is. Yes, it is. It's making higher lows. You see it. Low, higher low, higher low, higher low. Latasha, this is not necessarily Forex. However, you could use this on any currency pair. This applies for Forex. This applies for futures. Although I'm looking at SPY right now. This is an ETF that follows the S&P 500. This is the stock market. But this applies for any of the markets. All right, so look, right now it's in an uptrend. And I'm using the trend that it's in right now because I got more than 3 touches. It here, here, and here. Boom. That's all. That's what I'm paying attention to. The fact that it touched there, there. And also this range right here too. That's my support level. It's also in a channel. Let's change the color of those lines because I made fun of people. I made fun of the spider web people who chart be looking like spider webs and shit. All right. We got support at the bottom, resistance at the top. We got a touch here. A touch here. All right. Y'all with me? So you see how the price coming from support, going to resistance, coming to support, going to resistance, is back down here at support. What would y'all do here? So what is it looking like? What would y'all do here? After everything we've learned tonight, what would you do here? What are you paying attention to? What are we looking for? What are you thinking? Because we see what happened over the past week or two at this level, at this zone. What do y'all do? What do y'all do right here? Oh my goodness, shut up, squeaky chair. Wait till you hit the mark. Somebody says Santos. Santos says, wait till you hit the mark. Latasha says buy. FIK Trade says buy. What about the break and retest? What if it breaks below this level? What if it breaks below this bottom? What if the price keeps going down and breaks below this bottom trend line, aka support? If it breaks, we want to see it come back up and touch the bottom trend line and not go back inside this range, but instead come down, come back up and touch it and stop. Instead of going back into it, it gets rejected and pushed back down. All right, so yeah, that's a thing. That could happen. But if it doesn't break below this level, yep, that's what I would do, Michael. But if it don't break, if this level is strong and it holds like it held here, all right, yes, this will be a good long position. Let's look at what that will look like. I'm going to delete this. Or not delete it. I'll make it smaller. Don't need to be that big. All right, so cool. All right, let's look at a long position. So I'll show y'all how I would measure this as far as risk management would go. Long position. All right, so I want a confirmation candle. I will get in, let's say I get in about right there. My stop loss is going to be below the trend line. Not deep down here and shit to where I'm losing a lot. I don't want to lose a lot. I want to lose a little. Put it right there. I don't want to lose too little. Too little of a stop is going to kick me out the trade before it actually gets to go where I need it to go. So if anything, yeah, I'm going to have a stop. I'm going to have a tight stop loss. And then I'm going to make sure that my target level is really, to be honest, this is what I mean by the risk to reward is just easy math. The name of this tool is called, it's either long position or short position. Sophisticated. I was going to say Sophia. Sophisticated order. Thank you, Micah's Beauty. I appreciate it. You're welcome. But I hope unfortunately though, y'all, that's my time. It's been an hour and 30 minutes. I love y'all, all my new friends and TikTok friends and family. I appreciate y'all for tuning in. I hope I gave y'all real value tonight. It's been a pleasure meeting you, and you are welcome so much, Michael. You're welcome. I welcome and encourage all of y'all to tap the link in my bio and join the Discord. Become a long-term friend so I don't bump into y'all again. All right? I have more to give where this came from. Thank y'all for the gifts too. Telly, it's your birthday. I'm supposed to be giving you gifts and shit. Thank you. But yeah, that sums it up, y'all, for the support and resistance show. I want to make sure that I let y'all know that we got a bunch of stuff to talk about this week. But remember, nothing in this live stream was financial advice. This was an educational session. Your money is your responsibility. Trade your own plan. Trust the process. All right. And when in doubt, sit on your hands and wait for the next setup to come to you, y'all. We built different. So you got to act like it. Right. Trade like your life depend on it, because it do. If y'all want to go deeper, if you want the full Ironworth curriculum, my bio, the link is right there in my bio. All right, my inbox is open as well. Again, y'all, if this hour helped you, I would like to know. And discipline beats intelligence in this game. None of this smart shit matters if you ain't got no discipline. So if y'all don't take nothing else from this, take that. Risk management is gonna beat the home run every time. All right. Knowledge is not power. Applied knowledge is power. Knowledge is necessary, but it ain't enough. Knowing what support and resistance, knowing what it is don't make you a profitable trader. A lot of people know this shit. Most of them still lose money. Why? Because they can't sit their ass down. They can't sit still. They can't wait for the level to come to them. They think they can make some shit happen, and not in the market. You can't chase trends. You can't chase a trade. I tell y'all this all the time. If you chasing something, it's running from you. So they end up taking low probability setups out of being just bored. They move their stop loss in the wrong direction when they start losing, and then they take profit too early when they start winning. Then they win, and then they'll put too much dip on the chip and risk it all on the next trade, letting their emotions override the plan. We not going to do none of that shit. Discipline beats intelligence every time. Y'all with me? All right, I'm going to bring it home in the last hour. For those that missed it, the replay will be on YouTube. All right, you can get on YouTube and watch this replay in about an hour or so. So we defined the floor and the ceiling. We talked about support and resistance. We talked about what these levels actually are. We spoke on why they exist. All right, because obviously the market is made up of people. We looked at how these levels function inside of a trend versus inside of a range. All right, didn't we learn that context is everything? We hammered the point that these levels are zones, not just lines. We talked about the 3-touch rule and the danger of over-tested levels. We went deep on the flip, how broken support becomes new resistance and broken resistance becomes new support. Why the retest is one of the highest probability setups you're gonna ever run into. We walked through time frames. We learned the bigger the time frame, the stronger the level. We finished with real mechanics, how to find these levels, read price action, place stops. Come on now, y'all. Where else y'all gonna get this shit from on TikTok or anywhere? This ain't a small body of knowledge. That's the actual real working framework that institutional traders use every day. You got it in your hands now. You now got that skill set. What you gonna do with it? You gonna barbecue or mildew? My YouTube channel TGGG is Ironworth Trading. Again, the link is in the bio. Just go to my page, and y'all just click on that link and go straight to it. If y'all don't feel like typing in Ironworth Trading, that's my name on TikTok, Ironworth Trading. The same thing it is right here on YouTube. I said that backwards like a dyslexic person. It's the same thing on YouTube as it is on TikTok. Ironworth Trading. That's how I know it's time for me to call it a night. What pair is this? This is not necessarily a pair, Ninja, but this can be applied to Forex as well. But no, this is not a currency pair. This is SPY, the S&P 500. This is the stock market, not the Forex market. However, all of the information in this live stream can be applied to futures or Forex or stock options. Once you learn how to read a chart, support and resistance, none of that shit changes. It don't change in none of the markets. It's the same. That's why a lot of my followers trade Forex, futures, and stock options. A lot of